What's up, everybody? My name is Ashley Gunther, owner of The Lone Wolf. And in this video, I'm going to go over the 5 things you need to get funding in 2024. Let's get this started. So the first thing that you're going to need to get funding in 2024, whether it's startup, business funding, or personal funding, you have to have qualifying personal credit score. Do not get tricked in 2024 by the fake gurus that are saying your credit score doesn't matter. So there is a number of funding products on the market for you to get funding with. It's not just a bank product or a line of credit or equipment. There are several different programs. So every funding product and lender has a different credit score requirement. But if you look at the industry overall, these are the typical averages or minimum scores for each product. So if you're looking for a startup loan, a personal loan, or if you're looking to consolidate your debt, the majority of lenders on the market want a 640 FICO or Experian credit score. For a merchant cash advance, which is more about revenue, there are lenders that will lend to scores as low as 450, but most of them are 500 and over. Next, if you're looking to get a business line of credit, you're going to want to have a 650 credit score. Equipment funding can go as low as 580 depending on the situation, but most lenders prefer a 600. When it comes to credit card stacking, you're going to need a 680 plus for the 0% offers. And when you're looking at the SBA 7A program, there's actually 6 different products within the 7A. The majority of them are wanting a 680, although their scoring is a little bit different. And when you're considering going into your bank, your local bank, or your credit union, most of them are looking between a 680 and a 700. Now, a lot of these companies can't completely tell you what their minimums are. Yes, they will show minimums on their website or on their one pagers or on their social media. Keep in mind, just because you have the minimum credit score doesn't mean that you're guaranteed an approval. So what's the number 2 thing you need? You need qualifying income or revenue. So if you have qualifying credit, that's step 1. Step 2 is, do you have the income or the revenue to support an approval? So again, every funding product and lender has different income and revenue requirements. So let's also break that down. Again, if you're looking for a startup, personal, or a debt consolidation loan, the majority of lenders are going to want to see a $45,000 adjusted gross income. Now, if you don't know what that is a line item on your tax return. So go ahead and take a look at your tax return, page 1, go to the bottom. It's usually like 11B or 13. It could even come up as total income or adjusted gross income. That is the total amount of money that you're telling the banks and the IRS and everyone that you lived off from the previous year. Next, for a merchant cash advance, you can be making revenue as low as $5K a month to qualify for some of their lower end merchant cash advances. For the clients that we help, I typically like to see no less than 20K because the payments can be quite aggressive. Next, for a line of credit, the majority of lenders want to see you making 25K per month. For equipment funding, they want to see a $35,000 or more net profit on your tax return. If you show a loss on your tax return, you will be disqualified for startup loans, personal loans, debt consolidation, lines of credit, equipment financing, and SBA loans, including bank and credit unions. Excuse me. Credit card stacking is a little bit different because they're personal credit cards. There usually isn't an income requirement, although most lenders, when going through the process, they're going to put that you made 80K or so. For the SBA 7A program, again, they prefer a net profit of 35K or more. And for banks and credit unions, again, they're going to really want to see you making at least 45K a year in an adjusted gross income. Number 3 is your credit and income history. So we've established you need personal credit, and the better credit, the better your options are, and the more likely you will get approved. Next, you need some type of income or revenue. But now let's talk about the credit and income history, because having years of credit or years of operating make you lower risk or make your profile look stronger. So again, everyone is different. So if you're looking in the startup, personal, or debt consolidation, most lenders want to see you have at least 3 years of credit history and 2 years of income. Now, of course, you can have under that and still qualify, but that's typically where the lenders feel most confident. Next, a merchant cash advance. Your business only needs to be open at least 3 months for the majority of lenders. Some require 6, and there are a few that will require 12. For a business line of credit, they want you open at least 12 months, and a lot of them require 24 months. For equipment funding, they prefer you to be in 2 years operating with 2 years tax returns, although you can get startup and new business equipment funding. For the credit card stacking, it's good to have at least 3 years of credit and a solid good mixed credit. For SBA 7A, you can be anywhere between a new business and 2 years operating. And for banks and credit unions, again, they really prefer at least 3 years of credit and at least 2 years of solid income. So number 4 is the required paperwork. So if you have the credit and you have the income and you have the history, now you need to make sure that you have the proper paperwork in order to qualify. So again, every lender is different. But for all of these programs, the most basic consists of an application. Most are going to want to see 3 months of bank statements or do a bank verification. They want to see proof of your identity, like an ID card, a driver's license, or a passport. They're going to need your social security number. Even if they're doing a soft pull, they're going to need to confirm that for your identity and also to confirm your credit. And then the majority of them are going to want a voided check. But what are the other things that you might need to get approved? Now, for personal and startup and debt consolidation, they're going to want to look at your personal tax return, and they're going to do a bank verification, which means they're going to connect with your bank and make sure that you're making the consistent income or revenue that you stated on the application. Next, for a merchant cash advance, if you're looking for funding under 50K, you don't even need to include a tax return. But in order for your MCA to get approved, they're going to actually ask in final underwriting to show proof that you've paid rent if you have a landlord. They'll do a funding call, and there's a few other things. If you're looking for funding over 100K or 150K, they'll usually ask for financials like a balance sheet or a profit and loss. For a line of credit, they're actually going to ask you for a utility bill to confirm that you have a physical location. For equipment funding, they're going to want invoices for that equipment. So whether it's new or used, as long as you're using a US vendor, you can typically get that equipment financed. Next, for credit card stacking, most agencies that are going to do the credit card stacking for you is going to ask for your credit profile. They may have you create a username and a password for temporary use. For the SBA 7A program, they typically ask for 28 total documents. A lot of these may just be paperwork where you are signing a release form for the bank to get that information from you. And banking credit unions, again, they want a tax return or a bank verification. They're going to take a look at certain documents that way. Anytime you're looking for more funding, like I said, over 100K or over 250K, they may ask for a debt schedule, which shows all of the debt that you have and what you're paying on. They can ask for financials again, like profit and loss and balance sheets. So there can always be additional paperwork required. If you have lawsuits or a tax lien, they'll ask for that information. So every lender can be different, and some of them will ask for, Secretary of State proof as well. So each one can come with different requirements. So you want to make sure that you have all your paperwork in order and that everything's organized and within reach. Number 5 is you need to actually have planned for funding. What I realized in my nearly 6 years now in the financial market is so many people want funding, but then they don't really have a clear-cut plan on how to utilize it. So to be successful, you need a plan. So these are the 4 questions that I like to ask my clients about the funding that they're going to make. So number 1, how much money will you make monthly on this investment? So let's say you're purchasing a piece of equipment. Let's say it's 100K. And you know that once you have that piece of equipment, you can start offering a particular service, maybe a new service. So not only are you going to cater to new clients, you're going to offer a new service, which is a value add that should increase revenue and should bring more clients in. So what does that look like? Are you going to make an extra 10K a month, an extra 20K? If you're making an extra 10K a month, that's an extra $120,000 to your bottom line every year. That's a great investment. Next, how long will it take to start making money from this investment? Is it going to take a few months? Is it going to take 2 or 3 months? Is it going to take 6 months? Is it one of those things where you can make profit immediately? You want to evaluate that and make sure that it makes sense compared to the payments, which is number 4. Can you afford the payments? And next, what is the ROI on this investment? If you have a very little margin on your profit, it may not be the best depending on what the offer is. So when you look at these 4 questions, you look at your actual payment, you look at how you're going to make money, you look at when that money is going to come in. That's going to help you evaluate. And if you're working with a funding expert that actually knows what they're doing and they want your best interest in mind, they will help you calculate this, break it down, and make it make sense. So are you looking for funding but don't know where to go? There is a lot of fake gurus out there. There are a lot of options. It could be overwhelming. Obviously, you want the best rates, the best offers, the longest terms. You don't want to be bait and switched. You don't want to be lied to. You want to be informed and you want to be empowered. So I suggest you working with my company, The Lone Wolf. And why should you work with us? Because since February of 2018, we're almost on our 6-year anniversary. I'm so excited. We have served over 21,000 clients. We've gotten 1.368 billion in approvals. We serve clients nationwide, and we prefer to work with clients over the age of 22. So if you're looking to apply where there won't be a hard pull, where we're not charging you any money upfront or application fee, where we're not making you empty promises, go ahead and text the number 615-609-1177. Text funding to that number. You will be replied and asked a few basic questions to see what you qualify, and then you will be given your options. So if you're looking to make a great impact in 2024, if you're looking to finally get the funding you need to take your business to the next level, if you're looking for a marketing budget or buy new inventory or to add a new sales team, if you're looking to expand or move into a brick and mortar, replace equipment, really anything. If you're looking to invest in yourself, maybe there is a coaching product or a high ticket product that you're looking to invest in, you don't want to use your cash flow, we can help get you that funding. Just text funding to 615-609-117. Please go ahead and type and ask any questions in the chat, and go ahead, like and subscribe and check out my other videos. Thank you for tuning in to The Lone Wolf, and we hope to help you here in 2024. Let's go, baby. Boom.